Gold's on the verge of a breakout, finally, 2,100. Then it will move up, could move up also in a very strong way. Silver's looking explosive. Then you have the geopolitical situation. It's the BRICS countries against the rest of the world, and commodities are in play there as well. So there's so many positive developments on a fundamental level that people will be shocked. Watch the dollar.
Okay.
The dollar is leading. If the dollar is strong, gold is weak. The dollar is strong now for a few weeks, stay strong for another few more weeks. But once the dollar turns, and that will happen in Q1, I'm quite positive on that. Then gold will see its breakout, and then the whole spectrum might start to run.
On Thursday, the price of gold exhibited a slight uptick, reclaiming some of the losses incurred during the previous day's decline to a multi-day low. However, the momentum lacked clear bullish conviction, with the reduced likelihood of an early Federal Reserve rate cut supporting the US dollar, potentially capping gold's gains. Simultaneously, silver demonstrated positive momentum for the second consecutive day on Wednesday, recovering further from its recent dip to the $21.95 to $21.90 range, the lowest level since November 13th. Renowned author and founder of the Commodity Discovery Fund, Willem Middelkoop, weighed in on the gold market, suggesting that gold is poised for a breakout and could experience a robust upward movement, potentially reaching around $2,100. Middelkoop also hinted at the possibility of silver undergoing an explosive move, projecting surprising positive changes within the next 1 or 2 years. Middelkoop emphasized the US dollar's role as a leading indicator for gold prices and market dynamics, noting that the strength or weakness of the dollar significantly influences the direction of gold prices. Geopolitical tensions arising from conflicts in the Middle East and a defensive stance from US dollar bulls offered some support to the safe haven appeal of gold. Highlighting the significance of gold breaking out in dollars, Middelkoop suggested that this could mark the final break leading to a substantial recovery rally. Gold prices, at $2,032 an ounce, recorded a 0.2% increase following a 0.35% rise on Tuesday, marking the third profit in 4 days and moving away from 5-week lows at $2,001. Middelkoop adopted an Elliott wave perspective, outlining the forecasted commodity bull market extending over several years, characterized by significant moves and corrections. The recent bull market, commencing in the autumn of 2022, has already seen the completion of 4 Elliott waves, with Wave 5 initiating in late October 2023, and 4 waves within it already concluded. This analysis points to an ongoing upward trend in the gold market. Join us as we delve into insights shared by Willem Middelkoop. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
This feels like January 2016.
Okay.
We came at the end of a very long bear market. I even bought out my founding partner at the fund, January 2016. And then in the middle of the month, the market changed without any news. And the buying came back. And in August, September, market was up 100%. It feels exactly like that. And I think recovery could be even stronger and more violent this time. Why? Because we have shortages developing in many markets. Uranium, the squeeze. Lithium has been in over 80% correction. That could mark the change. Gold's on the verge of a breakout, finally, 2,100. Then it will move up, could move up also in a very strong way. Silver's looking explosive. Then you have the geopolitical situation. It's the BRICS countries against the rest of the world, and commodities are in play there as well. So there's so many positive developments on a fundamental level that people will be shocked in 1 or 2 years. We shouldn't forget that many of those markets are being managed or manipulated, so you want. And if you look at gold, not in dollars, but in other currencies, you see new highs everywhere. Look at gold in yens, very strong up market. And the market always breaks, the final break is always the gold price breaking out in dollars. And then you get the real recovery rally. And once gold runs, silver runs, and it runs faster. And you see the whole commodity space starting to move higher. And we've seen that in 2016. We've seen that after the COVID crash, March 2020. And this feels exactly like that. And we also saw it after the Lehman crash in 2009. And all these periods, our fund went up over 100% in a very short time frame. And we expect that to happen now as well, because valuations are so low. You know why? Many of our peers, we still have inflows. We still have net inflows. We're very fortunate. We have had net inflow every year since our start in 2008. But I see many peers struggling. Rick Rule closed down his exploration fund. There are rumors some large gold funds are closing shop. I can't name names. We see quite a few,
I want those names.
Yeah, off camera.
Okay.
I'm not at liberty to do it close, but there are some serious problems in the markets, even with institutional investors. And institutional investors, once they have redemptions or they close down shop, they have to sell. They don't want to sell, they have to sell. And they need to sell in a very illiquid market. And that drives the market to these desperate valuations. But we all know how this ends.
Right.
Once you have seller exhaustion, the market turns and it's off to the races. If you come at the end of a large correction, you see this in every asset class. If you have the end of a long correction, then you have a bottoming phase. In this bottoming phase, you have some false moves, some green shoots, and then you fall back and you retest the bottom. We've had the bottom for the commodity space January 2016. Then we had a retest in March 2020 during the COVID crash, but it was a higher high. Then we had a retest in 2023, late 2023, early 24 now. So we have a triple bottom, and the bottoms are higher. And gold's on the verge of a breakout. So this tells me the bottoming pattern has almost been completed. And once you break out from that pattern, the Elliott wave count tells you the same thing. You get move 3, it's the big move. It's the move which doesn't take 5 or 6 months like in 2016 or 2020. That will take a few years. And then you have a correction and you have another bull move. And then the real bull market started.
Yeah, it's so cyclical, isn't it?
Well, if you look at the latest analysis from an Elliott wave perspective, I like Elliott wave perspective. I follow A.V. Gilbert of Elliott Wave Trader. He was the guy calling the top in 2011 for gold. He was the guy calling the bottom in 2016. He says we're witnessing the start of a commodity bull market which will run till 2052, based on the patterns. We can't believe that because we're all children of a bear market.
Yeah.
We only have seen bear markets in commodities in the last 15 years. And you know why? Because of the debasement of currency, which is worldwide. So people will start to flee to real assets. Real estate is already very highly valued, highly priced. So commodities will be rediscovered by many general investors. You have the supply and demand situation, which is that's new. We've never have seen that in the world, that almost all metals are getting production deficits.
Totally.
And then you have this West against the rest of the world, the BRICS revolution, which will be like Zoltan Pozsar once wrote for Credit Suisse. This is the start of a new monetary system centered around commodities coming from the East. So you have all these big changes coming, and they all support each other. So I think you could have a runaway bull market in commodities for a few decades.
According to Willem Middelkoop, the BRICS functions as a strategic tool or club employed by China and Russia to influence and shape the emerging New World Order. This alliance is portrayed as a platform inviting new members to challenge the established global order. As part of BRICS' ongoing international expansion efforts, Russia and India have collaborated to establish a digital economy. The two nations recently announced increased cooperation, particularly in the development of modern infrastructure, with a significant focus on building a joint digital economy. Middelkoop underscores the noteworthy decision of Saudi Arabia to join BRICS on January 1st of a specific year. This move is crucial as Saudi Arabia traditionally served as a linchpin for the dollar system, notably through the petrodollar deal established in 1974. The geopolitical landscape complicates Saudi Arabia's decision, as rising tensions between the US, China, and Russia prompt Riyadh to evaluate its options. The warming ties between Saudi Arabia and Beijing have raised concerns in Washington, leading the kingdom to explore an independent path amid apprehensions that the U.S. may be less committed to the Gulf's security than in the past. Let's get back to the interview.
I think this is the most important geopolitical driver. I'm the author of The Big Reset, The War on Gold and the Financial Endgame. I've been studying this topic for a long time. And I explained in the book that China and Russia have been working together since at least 2014, 2015, to try to change the current world order together. And they use the BRICS as their club, as their new club. They invite new members to the club. And it's very significant that the Saudis have decided to join the BRICS January 1st this year. And why is that so significant? Because the Saudi was the anchor for the dollar system because of the US petrodollar deal from 1974 when Henry Kissinger traveled to the Saudis to look for support for the dollar after Nixon took the dollar off the gold standard. And now the Saudis have pivoted east. They pivoted from west to east, and that's very significant. And I think we're in for some exciting developments. The West is in decline. We won't collapse. We're in decline. Like the UK was in decline at the start of the 20th century. The pound sterling is still there. The dollar will still be there, but it's in decline as the hegemon, as the world's hegemon. And then we'll see a separate parallel trading system, financial system, maybe monetary system coming from the East. And this will be competing with the West, like we had in the old days, in the 1950s and 60s, when the Soviet countries also decided to opt out of the Western system. So we are moving from a globalized world and economy to a de-globalized world and a de-dollarized world. It doesn't mean the West will collapse, but the good times are, well, we've seen peak dollar. No.
Where are we in the global economy for the West?
Well, it's getting quite serious because we've seen the fastest rate rise in history over such a short time frame. And this was done on purpose by central bankers because they needed to cool off the economy because the inflation was getting red hot. And this crisis is caused deliberately by central bankers. And now they have to wait to see if the fallout will be very serious or even more negative, and then they will start to lower rates again. And this year we'll see answers to that question.
Gold faced downward pressure on Wednesday, influenced by a strengthening dollar and rising Treasury yields. The cause was the data indicating that U.S. business activity experienced greater than expected growth in January. While the Federal Reserve is anticipated to keep interest rates steady in the upcoming week, traders will closely scrutinize Fed Chair Jerome Powell's statements for any indications regarding the commencement of an easing cycle. Amid geopolitical tensions and economic uncertainties, how might global events impact the dynamics of gold and other safe haven assets? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.